Julia Lees at Bell Direct to cap a bit of a disappointing day, Julia.
Carson, a bit of a disappointing day is an understatement, because going into the session, the leads were pretty good. We saw a mildly positive lead coming through from the US. Commodity prices weren't too bad. The SPI futures were trading higher. And yet by the end of the day, we actually saw a tumble down 44 points. And you can see that in the afternoon, the losses really accelerated for the Australian share market. We saw a switching in traders and investors' activities from the cyclical and growth sectors back into the defensives. So it does look like the market's willing to take less risk on. The areas that were sold off were the energy, the materials, the industrials and the discretionary sectors. So all of those higher risk sectors. In fact, if we have a look at some of the big stocks in those sectors, we saw BHP Billiton losing 1.8%, Rio Tinto lost 3.4%, Leighton's, which is the biggest stock in the industrial sector, lost more than 6%. On the flip side, though, we saw defensives coming back into favour. So the healthcare, the staples as well as the telecom sectors all gained ground. Now, the banks had been doing pretty well in the past week with gains of more than 4%. Today, they did see some profit taking coming in. They lost between 0.3 to about 3%. The Dow futures, I guess, was one of the things influencing the market. They've been down about 0.3% in screen. But also yesterday, I was talking about the technicals for the S&P ASX 200. If I bring up the 52-week chart, you can see that we're at a pivotal point at the moment, around that 4,350 point mark. In the past, in around about September last year, you can see that it really acted like a ceiling for the market, and we bounced off that mark around about 3 times before we saw the market stumble and go down lower. At the moment, we're seeing the market still around that point, and the market hasn't yet been able to break that ceiling. So we are seeing quite a bit of weakness coming into the Australian market. Also, if I bring up the relative strength index, this is what it looks like. And when it's above that black line, it does mean that the market's looking overbought. So potential for a bit of a pullback. We haven't seen the RSI at these levels since around about January last year. So the last time we saw that, the market pulled back about 350 points. I don't think it's going to be as bad, but the market has run pretty hard and fast the last couple of weeks, so it's only natural that we do see a pullback.
DJs has run hard and fast, big time from its lows, of course. Is that kind of the reason it snapped the gains today despite good Q4 sales numbers? Absolutely.
Now, David Jones came out with some good fourth quarter sales numbers, up by 0.6%, better than expected. And so by all accounts, David Jones' share price should have risen. But I guess what explains its share price fall today is how much David Jones stocks has gone up this year. Let me just bring up a share price chart for David Jones, and this is a 52-week chart. So this is the share price performance for David Jones in the past 52 weeks. Now, we saw a low of about $2.10 reached in March, and yesterday, the share price actually finished at $5.25. So the shares have pretty much made a 100% gain since the lows that it saw in March. So only natural that the shares pull back, because the shares were really priced not only for perfection but for outperformance, and outperformance really didn't come. The market was expecting to see a bigger and an upgrading of forecasts. Instead, David Jones reiterating forecasts. So the market disappointed, and David Jones stock tumbled today. But you can see just how far and how fast it's run up. So pretty natural for David Jones, given that it hasn't changed its forecasts.
Explain the logic as well of Network 10. The shares came back online. They actually rose rather than fell despite the dilution.
You have to say 10 would be pretty happy with not doing that capital raising back in February at 75 cents. It's stock the best performing large cap today. It came back online after the capital raising that it did at $1.15. So if I bring up 10 share price, this is its shares in 2009. It was going to do a capital raising at that 75-cent level earlier on in the year, and of course they cancelled it. So they've issued the new shares at that $1.15 mark, but you can see that the shares came nowhere near those levels today. We've seen brokers keeping their rating on the stock, and the ratings range from around about a hold to a sell. But I guess what's driven the shares upwards is they've actually increased their targets on Channel 10 or Network 10 10, and that's really because some of the debt cloud and the debt concerns are no longer with that particular stock. Now, 10 has raised $138 million. They're going to use that to pay down debt and make sure they're in their banking covenants. It's been good news for the share price today. The share price rising 5.6% and finishing at $1.32.5.
Let's finish on an up note, although the market itself, as you say, gasped a bit today. Have a good evening. Many thanks.
You too. Thanks, Carson.
All right.